The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Start out the show today with the most widely held stock in the world, I believe. It's Apple. And maybe ExxonMobil might be the wildest. I don't know. Used to be ExxonMobil, but I think Apple took the place last year. I don't know if it held that place or not, but it's in the top one or two or three. The thing that you want to watch here, folks, this is Apple going back over the past year. You can see after we made that high up around 131, we went sideways for about 4.5 months, allowing everybody that wanted to buy it. And now we are down, considerably to the tune of about 40% from that high. But what's interesting here is what's happened yesterday. Yesterday we had a rally just about to the 103 level, and that should tell us that we should be coming into a really strong resistance. And the reason why I say that is if you'll look at the ABCD patterns, that we have there, we'll be able to look at that now. We have a question about Google. I don't believe Google is even close, Mike, because it's such a high-priced stock, and most people, they shy away from stuff that's high-priced because they think it's not of good value. But that's just my guess. We'd have to Google it and find out, or somebody really smart here in the Tiger family will tell us which is, I believe it's either Apple or Exxon, but that's just my guess, and believe me, that is what it is. It's a swag, as we all know what that is. But anyway, as we get back to the Apple, you'll see these multiple ABCD patterns that we have forming here, and that's the main thing of what we're looking at. So that's it. We'll see. I was talking about the most widely held by people, not just market cap. I was talking about the stock that's most widely held by folks either in their 401ks or whatever it happens to be. Okay, anyway, this is what it looks like. Apple has a lot of patterns coming into this $82 a share, and I think it's going to be headed down that way. It's still a great company, or we assume that it is. You remember we've seen a lot of these before, that have been great companies. If you remember companies like Eastman Kodak, which was one of the nifty 50s, Polaroid, all of these were household names back when I was a kid, and now, they're not doing anything like that. There should be a heads up today, folks, because we've made a new high in crude oil on a spot basis. We have not. We've also done that in heating oil, but we've not even come close to that in the gasoline futures. So there's a possibility of a divergence here in the crude oil at this $50.50 per barrel level. But we only made a high by just a few pennies, which I thought was rather unusual, but it's still really, really early in the day. I did want to mention something historical. There was a special on the public channel, which we watch quite a bit, and it was about the Beach Boys from 1980. It was an hour-and-a-half show showing the last time the Beach Boys were together as a group with Brian, Dennis, and Carl, and Mike Love, and Brian Johnson, or Bruce Johnson, and Al Jardine. Well, the last time they were all together was in 1980, because shortly thereafter, in August of that year, we lost Dennis Wilson to a swimming accident in Marina del Rey. Then, 10 years or so, 15 years later, we lost Carl, and out in La La Land for about 10 or 15 years, even though he was a tremendous genius. But it really brought back so many wonderful memories. I can remember when Dennis died, the headlines in the Los Angeles paper was "Dennis is dead," and that's all it said. And then, of course, had the obituary a little bit later. But everybody that has anything to do with the California scene certainly knew who the Beach Boys were. And that's why this old cowboy loves the Beach Boys, always have, mainly because my children were little surfer girls out of Malibu. And they got to meet several of the Beach Boys several different times. And we always had a wonderful time. Really nice guys. I mean, they were just nice, all-American kids. And they're still going strong. There's only one left. Mike Love, he's the only one he's the tenor singer, but Brian Johnson is there. He's the first one to come in, taking Glenn Campbell's place. Well, let's get back to the markets. You don't want to listen to that stuff. That's just old man talking. Let's get on to the markets. Here's what we have going, folks. First one I want to talk to you is about this NASDAQ chart. This is the one that we're going to be looking at this morning, because I want to try to show you what I think is happening. I posted that chart yesterday about the incredible harmony that we have here in the stock market. We have the new moon yesterday. I don't know if that's what made the market go up one more day or not, but if it's up another 60, 70 points in the Dow today, all of that symmetry is going to be broken. As you can see here on this NASDAQ chart, you'll notice the beautiful head and shoulders pattern that is formed 46 trading days apart, perfectly equal. And if you'll notice that it is really a perfectly symmetrical head and shoulders, because the right shoulder is just a little bit lower than the left shoulder, which means it's still in a bearish format. If it were a little bit higher, you'd be looking at a 3 drive to a top pattern. So this is what you're looking for if you're watching this. Now, this is either a big test that we're having here in the NASDAQ, or this thing is breaking out and we're getting ready to attempt new highs. And we could certainly do that without any trouble at all. There's really, with the market only being 20 handles away from a new high, I mean, that's just one word out of Janet Yellen or somebody else to say, gee, this market is going to go a lot higher. And we certainly could. I do not believe that we're going into a new bull market for a lot of different reasons, and that is this massive distribution that we have across the board and everything, particularly, looking at this New York Stock Exchange Index, because this is what we're watching, and this is, I want to bring this up here to show you, because this is what happened yesterday. And I want to give you an idea that not much has happened a lot differently, because if we get above 10,650, and I believe we closed around 10,580, somewhere around that. If we take out that April high, I know you don't think that means a lot, but if we do, then you will be looking at the possibility of another leg up, maybe even matching the high from May 19th. Now, today on the break, or after the break, we're going to have Bill Koval of WDK Analytics as our guest. And then tomorrow, boys and girls, Mr. Rogers is going to have one of our favorite people on the air, and that is Norm Winsky from Astro Trends will be on. And on Monday, we're going to have Bill Meridian of Cycles Research out of Vienna, Austria will be our guest. And sometime next week, I also hope to have Grace Morris from Astro.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, boys and girls, we're back, and unfortunately, I am out of data and internet and everything else. I'm doing this from a little cell phone here. So we'll see if we can continue on, with some of the things that we'll look at. I wanted to share with you one of the charts from our good friend Shane Smullian from wolftrader.net. His, terrific newsletter that he has is it's really awesome, and I wanted you folks to take a look at. Unfortunately, because I'm not even able to log in to the Tiger's Den, I'm not even able to do that. So we're just going to have to sit here, and I don't know what you want to talk about. If you've got, I can't even read any questions. So you know what I'm going to have to do? I'm going to have to wing it. That's what I'm going to do. Anyway, what Shane is looking at here is the speed of those planets that we've talked about many times, especially the Mercury and Venus. That's the work that was done by T.G. Butini and also by George Baer. And Shane is he's taken up the gauntlet from those gentlemen. And with the computer power that we have now from Alfie Lavoie's titanium program on astrology and cycles, you're able to do a great deal of research. And anyway, this particular diagram, if you're interested, if you go to wolftrader.net, that would be able to get you to Shane, and he'll be able to give you some information on that. So that's the main thing that I'm trying to cover at this particular time. They're doing construction here in Philadelphia. I don't know if you folks have ever been here, but the street that the kids live on is 300 years old, and it's only one buggy width wide between the houses right across the street, because that's what they had back in those days. And it's really cool. And there's a really neat private courtyard around it, and they're doing construction because so many of these sewers and other things, they're not 300 years old, of course, but some of them are pretty old, and they're doing some construction, and I think they've hit some lines that have disrupted everything. So we'll just work it by phone here for a while, and hopefully my battery on my phone won't get out of distance here. But anyway, we were finishing up. If you do have an interest in this chart on planetary speeds of planetary cycles and how they come in, if you go to www.wolftrader.net, and then you'll be able to, I'm sure he'll be able to, send you one, and you'll be able to take a look at it. Also, Norm Winsky will be on tomorrow, and Norm's also looking for a key day today. And remember, we had the new moon just yesterday, so either this cycle was off by one day, or we're going to blast up into new high ground. Whether that's going to be the case or not, we have to wait and see. Regarding the gold market, we had a question about the gold. Now, gold's had a pretty nice run up here from $11.99 up to $12.49. We rallied, $59. And then what we've been able to do now is we backed off the same amount that we did before we took off. We backed off $14 from the high. That's just like what we had when we went from $12.28 down to $12.08, right before the Fed came out. It wasn't the Fed, it was the jobs report came out, and that's what made the market, run so much. And this has equaled that little sell-off. Now, that's a very small sell-off, but in really bull markets, that's really all you get. And the 38% retracement of that move comes in at 12.38, and our low today so far in gold has been, 12.39. So we want to watch that with a great deal of anticipation also. So I'm flying blind here, and I hope everything. I don't even know if I'm on the air, so we'll see. We'll see what's happening. I'm not able to post any charts because the internet is down, so I'll just have to talk through them, and we'll see if they are going. Regarding the market in the new high ground, this is very similar. If we do get there, and we're not very far away, the old high was 21.34, and we could easily make that, but it would be very similar to what we have going on in the what we call the October high of 2015, when Bernanke came out and said all signals were go. There didn't seem to be anything out there of a black swan effect that would cause these markets to get off kilter. And of course, we had the worst housing crisis in many, many years happening at that time, and the Fed did not see that. If they did, they didn't tell us about it. And remember, the Federal Reserve Bank is not a Federal Reserve Bank. It's a bank for bankers. It's run privately, and they give us our money supply. And if you remember the words of Thomas Jefferson, he said, "You may have all your standing armies. Just let me control your money supply, and I will own the country." So Thomas Jefferson happened to be, in the words of John Kennedy, probably the smartest president we've ever had. He mentioned once in the White House at a state dinner that this was the greatest collection of minds that the White House had ever seen in one room, except for the time when Thomas Jefferson dined alone, because he was one smart cookie. He was the gentleman that was here in Philadelphia, of course, he's quite famous, along with Franklin, who was not a president, but Jefferson is one who constructed the Declaration of Independence for all.
Trade what you see with Larry Pesavento. Trade what you see with Larry Pesavento.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, this is Billy Ray Valentine from the offices of Duke & Duke, talking to our friend Bill Koval from WDK Analytics in Stale, Arizona. Bill, are you there?
Yeah, I sure am, Larry. Can you hear me?
I can hear you. The problem that I'm having is I'm having intermittent internet problems. So if we lose you, what we'll do is we'll try to finish up and have you on another day if we can. But right now, things seem to be going okay. What I'd like to do, Bill, is you've done a pretty good job at these really key spots with your distribution and accumulation things that you're looking at. So what I'm going to do is post that first chart that you've sent us and I think the folks would have a pretty good idea. This is actually gold, and they have a really strong interest in the gold. And we were just talking about that before the break. So you want to talk us through what you're seeing in the gold market right now?
Sure, Larry. Keep in mind that the common thread throughout these analysis that gives us so much confidence that the long-term trends are down is the volume lines that we use. And in this chart, it's the white and the turquoise dots. And what we're looking at here is that, of course, we had a bounce recently off that 618 line from drawn back from like $320. But I don't think that's going to hold. Just simply volume is still way over price, still pressuring price. It just simply has a lot more down work to do.
Now, Bill, your work on volume, this is one of the areas, I have lots of areas that I could use improvement in, but, volume is one that the only time I usually watch it is when I'm dealing with, record volume or, just total lack of volume. Then I'm interested in those particular times. But you have a thesis on volume that I think you ought to run through. You want to go through that for us? I posted that into the room, and also your website, wdkanalytics.com. But you want to go through your thesis 1, 2, and 3 for us?
Yeah, sure. Basically, I'll reiterate again that we figured out a way to, put volume up on the charts instead of having it below in a histogram where you can't really understand what's going on. So with the gold chart, we're looking at, severe overbought conditions over a number of years of escalated prices and heavy demand. But I think that's coming to an end. And as you'll see on the other two contracts, it's pretty much the same pattern. But as far as the thesis goes, I mean, the overriding thing is, and the thing that is making these things very tenuous and headed lower is simply that I believe there's just a lot of deflation in the background, and some of the smart people are seeing that. I mean, what can drive oil and gold and the dollar all to mediocre prices in the face of record equities? It's simply fear of deflation that's coming, and equity is equity is the odd man out, as so often happens. Back in 2008, while the market's crashing, crude went to $150 a barrel. I mean, how does that happen? Well, I believe now everyone is lining up except for equities on the deflation and lower commodity prices, which, by the way, will cause bonds, as they have lately, to move higher. But ultimately, in years down the road, they'll get clubbed as well. But for the time being, this is what we're looking at. Overbought conditions in crude and the dollar and in gold, which I expect to work all further to the downside over the next few years.
Terrible connection. Okay, Bill, we've had a pretty good rally in some of these commodities like soybeans, wheat, corn. Even copper rallied a few cents, but you view that just more of a rally in a longer-term bear market. Oh dear. Well, looks like we lost Bill.
I'm actually here, Larry. I don't know if you can hear me,
okay.
but
I could hear there's a staccato. Well, it's internet problem, but your voice is like da 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 da. So we'll do our best here to go through it. What are you seeing in the stock market right now, Bill? You've done really well during the time we've had you on the air. It's a major bottom that you course called on February 8th. I and you were spot on that one, and it really was good. So what are you seeing now? Because here we are, within 20 handles of a new all-time high. So are you seeing anything here that we should pay attention to?
Well, you made a comment just earlier this morning that if the market doesn't stop here, it could have a breakout, and I would kind of agree with that. I mean, everything is overbought, but that doesn't mean that it can't go higher. And I'm very skeptical of the rally. I think it's overbought and should go down, but will it? I simply cannot tell right at this inflection point. If the buyers stay in there, I mean, it may well go higher.
Okay. All right. Now, I wanted to ask you one other question. If you have a really interesting newsletter that's becoming quite popular, if the folks want to reach you, what's the best way for them to reach you?
Well, you can do so via the WDK Analytics website, where my contact information is there in a box that you can fill out. And secondly, there is a newsletter tab where anyone who wants a free subscription can simply enter their email, and we'll fix you up with a free subscription.
Okay, we have a question for one of our listeners about what's your view on the crude oil market up here at $50 a barrel? Do you see anything that's interesting at this level?
Well, to be clear, I think on a lot of these long-term charts that we've covered, there's more upside in the near term, and I well think crude could move higher. I even think gold. I've looked at the shorter term gold charts, and the intraday, the 240-minute gold is a buy, and the monthly. Or not the monthly has a little bit of buying tendency, but oil, I think looks a little reasonably solid at this point.
Mm-hmm. Okay. Any particular other commodity between gold and the crude oil that you have an interest in? Is there anything that you have an interest in that you wanted to share? Oh, why don't you? We got to pay a few bills here, and stay with us, and we'll be right back. Okay, with Bill Colwell, WDK Analytics.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back with Bill Koval of WD Analytics. And Bill, we had a question from one of our listeners from the UK. Do you have a feeling on the British pound versus the U.S. dollar, and if that Brexit thing is going to either go or not go? I can tell by the sigh in your voice that you maybe don't.
Well, it's been a lot.
That's okay.
No, I'll answer that question. It's been a long time since I've traded the British pound, and I as far as the valuation, I'm not the right guy to answer that. I will venture this, however. I think Brexit, along with a lot of these other geopolitical events, kind of are set up ahead of time, and it wouldn't surprise me if this thing comes down to the wire and everybody's worried and the markets go down, and that's just an excuse to buy it, at that point. I don't seriously think it'll happen.
Well, they're very good at using fear tactics. We saw that with too big to fail, back in 2009. So that's basically it. Well, I wanted to thank you for being on our show today. We'll have you on again. And Bill, anytime you have something that looks really interesting for us, just drop me an email or call me, and we'll try to have you on, because we really respect your work. You've done very well with the bottom that we had in February. I thought that was really good. And in fact, you were extremely bullish at that time. And so if you see something that's interesting, be sure to get in touch with us, and we'll have you on again.
Yeah, sure will, Larry. Thanks for the opportunity. And keep in mind, this view is a very long one that we just discussed. It has nothing to do with the daily, weekly, intraday outlook, of which I'm bullish on a few areas. Even I think the dollar has gotten pounded down quite a lot, and could come in for some buying. But at any rate, listen, yes, we'll talk again.
Okay, thanks a lot.
All right, bye-bye.
We'll talk to you soon. You bet. That was Bill Koval of WD Analytics of Scottsdale, Arizona. And what we're going to do now is we're going to take a look. I posted into Tiger TV the picture of the gold chart I was discussing before I lost internet connection, and that shows the gold bottom that we made down at the 1199 level. You'll notice that was a 3 drive to a bottom pattern, and then also we had the rally up. We had the pullback exactly to the tick at the 618 level at 1208. Then we had the non-farm payroll, and then we exploded to the upside. And what I was trying to illustrate here is when a market takes off like this, a lot of times it doesn't give you a chance, to get in it very easily. So you have to go back and ask the market, okay, what did you do the last time you had a sell-off? And if you'll notice those little red boxes that I posted in there, those were equal boxes, and they've come within $1 of that low so far this morning. We've rallied back to that 1242 level, but as long as we can stay above 1235, this would certainly be something to look at, especially that 1235. And the reason why that's important is that would be a 38% retracement from the last fib number that we had at 1208. And as we know, 38% are the best as far as the strongest of any move, because once they hit that and take off, they move very, very quickly. That's one of the advantages of watching numbers like this, because if it goes anywhere near $3 a barrel below that 1235 level, it certainly negates the 38% retracement. And the only time I use 38% retracements, folks, is when I have a nice ABCD pattern over at least a 2-day period, and this certainly qualifies for that. So this is what we're taking an eye in gold. I think if we get above the 1255 level anytime soon, we have a chance that gold has potentially made a major bottom, but we still don't know that yet. It's just a little bit early in the game, but we'll keep an eye on it. As far as the British pound, I wanted to share with you because the vote now supposedly coming out of the UK, I just checked it this morning, that the odds makers are saying that it's better than 2-1 that there's going to be a Brexit. Just a few weeks ago, it was 3-1 again, or 4, and now, or for staying, and now they're saying it's exiting. So pays your money and takes your choice. You just don't know. But this is a chart going back to 1985 when we had the Plaza Accord. That basically was the agreement following the Bretton Woods Agreement from 1942. Nixon took us off the Bretton Woods in 1972. In 1985, the Plaza Accord came out. And what's interesting, look at that 1985, folks. Look at that monster ABCD pattern that measured right to 105 in the British pound. That was really a perfectly symmetrical 3-drive pattern, and it rallied all the way up, of course, to 205. It doubled in price over a period. But what we have now is this long consolidation in this $1.40 range, and if we can get it down one more time into this 137 level, into this Brexit, this might be a real interesting bullish pattern for the British pound. UK is not going anywhere, and I don't know whether it makes any difference whether they're in the union or not, but we'll see. It's all, like Bill Kowal was saying, it is all political. I believe that 100%, and it's, the stuff that they feed us is not always what you think it is, so be very, very careful. I don't know, frankly, how anybody can watch TV and news anymore with all the political stuff that's out there, because it just literally, if I were a tourist coming into the United States and had to listen to that stuff, I would really have a sour taste in my mouth. I mean, it's just total cannon fodder in my opinion, but that's my opinion, and that's just the way it is. So we'll wait and see how that moves. Remember that we do have a new high in crude oil today. It made a new high by about 10 cents. That's not very much of a thrust, so watch it, because we're right up at that 61% retracement on this, and you'll be very, very interesting, because if we don't follow through, we should get a sell-off if we do, and if we do, then we would have some strength in some of these things that would be telling us that we might be rolling over here from this level. But right now, everything looks good. The stocks are still acting pretty good. Gold is still about unchanged on the day. The bonds are almost making a 78% retracement of the last swing from the high we made at 167. And the currencies, the euro has been in a real tight trading range after that monster move we had on Friday that came off of a perfect Gartley, 618 Fibonacci low at that 111.40 area. And of course, it rallied 300 pips in a matter of about 8 hours. Fortunately, I was able to take a very small percentage of it, about a third, but it was still a nice warm, cozy feeling when those happen. Folks, let's spend a few minutes here. Well, we got to take a break here pretty soon, but pay attention here if you're in the grain markets. And the reason why is we're starting to see a decrease in open interest in soybeans, and that was the leader of the pack on the way up. And we've had a blow off top, I think, in December corn, new crop corn. We actually left a 3 cent gap, and I defy you to find a gap on a corn chart. I mean, that's just that's going to be filled. That's down around the 418 level, but then we're trading at 428 right now. But for corn to leave a gap, I mean, this is the start of the growing season. This isn't August, so. Or July, and so pay attention to those, because this could be something serious. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I want to leave you with this chart of the New York Stock Exchange Index, which you know is the most comprehensive of any things we look at. This has an incredible amount of harmony in it. This is a longer-term chart going over the past year. We made our high on May 19th when we had Norm Winsky on with Mercury retrograde, a new moon. We have a new moon now, which was yesterday. You'll notice the symmetry here is just really amazing between the ups and downs in the ABCD. All of this fails if we get above 10,640 in the New York Stock Exchange Index. That would break this harmony, and it would tell us that, yes, we are probably getting ready to go up into new high ground. We have not had any really good volatility in the market. In other words, we really like to see these days where we're swinging up and down 300 and 400 points like we were in the bottom during January. Those are the ideal times, you know, to be a pattern recognition trader, because you have such tremendous profit opportunity with the very, very low risk. At this particular level, you have low risk, but your profit opportunity is also limited because the market just seems to be going sideways, and that just happens to be the way it is. We had one other question about the British vote, about their sovereignty. You know, they're just like most people. They are very proud of all the Europeans. I think the Germans and the Brits are you know, tied. And as they should be. Should be proud of your country, and that means you got to stick with them when things go bad. And for the last 8 years, things have not been going well here because we have too many people on food stamp. Going to get off my soapbox, talk about the market. Anyway, keep an eye on that 10,640 in the New York Stock Exchange Index. That equates to the Dow above 18,000, I believe. I believe it's 18,000. Yeah, right near 18,000 would be that spot to look at it. So watch that. That's a very important, because if we do turn down from here, then that would tell us, yes, that this harmony is here and we could be going lower. And you're running into less and less bearish people. Even Bill Koval, myself, I mean, there's no reason to sell it. Want what the market wants, and right now it wants to go higher. 877-927-6648. Live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.